Alrighty. You're not going to hear me come out of the mic. It's just for the person at home. So I'm just going to stand up. You're not going to hear anything. I'm the CTO of Asset Exchange Yosemite. We're based in Palo Alto, California. So I took the trek all the way out here to see the big city. I am a systems researcher at Stanford in the computer science department. So I spend a lot of my time thinking about these kind of problems with the blockchain, how to make it faster, everything like that. Previously, I ran a quantitative, I know you introduced me a little bit, but I previously ran a quantitative hedge fund trading public market equities for the last 2 years. And after a while, it just seemed more interesting. I was kind of sick of that finance space of it. And this is one of the most exciting to be, at least market-wise right now. And so without further ado, I kind of just jumped in. And so it's me, and then our director of alternative assets is Miranda back there. And so she's the one that is friends here and invited us to come speak. So what's broken? The internet seems to work fine for most people. And so I just want to give off a little primer about like, what is this whole blockchain thing? I know some people raise their hand for familiarity with it, but I think there's not like a lot of whole good descriptions online about exactly what's going on. And so it's a brief intro, and then I'll give an introduction to what we do and how that relates to everything. And if you have any questions, feel free to stop. I love more of engaging discussions and like don't mind stopping and talking. I love tangents too. It's one of my favorite things. All right, so what's broken? The internet seems to work. There's me. I can go on the internet, I can go on Instagram, Facebook, fine. I can go and I can buy tickets and everything like that. Well, what happens, let's say that if I want to send some money to friends, it requires using a lot of other services and systems to make it all work together. There's nothing saying that I can't take, let's say $1, if it's a digital dollar, and copy it both times and send it to both people, something like that. First person that tries to spend it is going to be the lucky one. Could be me, it could be buyer one, it could be buyer two, but there's no way to know who actually owns it. When the internet first came out, that was a great design benefit because it meant that you could make a million copies for free, which allowed all these systems and like Google searches and everything to blow up because it was really easy to make infinite copies. The issue though is sometimes you do want to treat something digital like something physical. And this was known as the two generals problem in computer science and so what ended up happening was in the late 90s, someone came up with an idea, unknown, that transferred digital ownership by having a consensus distributed data store across the world that tracks who owns what when. And that's the major notion of what blockchain is. And so if you're able to know who owns what, I can't give something to you and you. The second time it'll just get blocked, and then I also can't use it because I don't own it anymore. So this comes down to what is a block. And so you hear this term blockchain and blocks, and what does that mean? It's just a tiny little file. For the most part, it's a megabyte. Right now, it's being pretty contested, but for now, we'll just say it's a small file about 1/4 of the size of a song, like a digital song. And it just has a list of transactions from one person to another person with a timestamp on it. And you have a big list of these. And so that's why it's called a chain. And each block, and I lied, there's a couple other fields here that I'm keeping it pretty simple, that connects from the current block to the previous one. So we can see what one came before it and the one before that. So we can look back and say, oh, that transaction has already happened. That person actually doesn't have any like currency or art or anything like that to spend. And so the glue that makes it work is what you hear is called mining. And so mining is about confirming no one in the past graphic magic that I'm not going to get into that makes that possible. And so what it requires is that 51% of the people that actually mine are good. If less than 51% are good, they can undermine the network, and then you can have double spends and stuff like that. And so the whole notion when this first started was, wow, I mean, it's not going to take that many computers to steal everything. We got past that point now, so the total compute power in the network is bigger than basically most of the supercomputers in the world combined. So it's almost infeasible now that you could actually get that much compute power to derail it, which is a really powerful point. Now, this is really complicated, so let's go over that again and talk about it one more time, because this is kind of what happens in this thing is it's a lot of complicated math that everyone just kind of assumes you can get. And so sometimes it took me a while to figure out exactly what is going on here and understanding it pretty concretely. So you got a bunch of little tiny files that everyone around the world stores that says who spent what. They're connected to all the blocks before them, so you know the transaction order. And then there's a lot of cryptography going on that prevents people from actually taking over certain transactions and the blockchain unless they have the most compute power, which right now is basically impossible. And so that's what all ties it together. If anyone has any quick questions before I move on into talking about more about what the blockchain can do, I can get into this a little later. Yeah, sure. So to actually mine, you need to have a complete history of all of them ever created. And so that is starting to be a pretty big amount. But to actually use it, you don't need that. When you want to create a transaction, you just broadcast it to the network and say like, hey, I'm trying to send money from here to here. And then the miners decide what transactions to pick, which is why that you attach a fee to your transaction to say like, hey, pick mine, I'll pay you this much money to process my transaction. And so in Bitcoin, let's say if I was like, hey, I want to send money to the other person here and didn't attach a fee to it, your transaction is never going to get processed. But if you say, hey, I'm willing to pay 5 Bitcoins for you to transfer my transaction to you, which is a lot, but he would never do that, you'll get picked right away. And so you can't have any more guarantees than that. So it's not perfect for everything, but if in Bitcoin, I think you wait like 20 minutes right now to get your transaction processed. And it's not many at all that kind of, this is like some of the big issues with blockchain, Bitcoin. But there's a lot of other uses outside of just Bitcoin for this kind of stuff that we'll get into in a second, like the art token we were talking about. Anyone else have any questions? Yeah.
What's the linkage that links the blocks?
The linkage? So this piece right here is this is where it gets complicated, but the previous block, you can take any file of any arbitrary size and compute what's the hash of it, which is a 256-bit. Think of 256 zeros and ones next to each other that basically uniquely identify anything. And so you can uniquely identify the block behind it with this 256-bit thing.
Within the block?
Yeah, so it's stored in this block, the next block mined. So you can see what happens. And so the beautiful part of this is that let's say I change the block behind it and I have its hash stored here. The hash will change unpredictably. So if you wanted to change a block like 100 blocks ago, you would have to recompute every other one after it, which because of this cryptographic magic that I explained earlier, makes it really difficult to do because you'd have to do it faster than all the other computers in the network, everyone else mining. So that's why you need to have at least 51%.
And to add to the hash, if you say you change a 0 for 1 a few blocks behind, the actual hash is not going to match because you change just a tiny value. The hash now that represents that block is different. And because every other computer knows what was the original hash, is not going to accept that block as a value.
So it'll just wipe every block after that basically out. So that's where the difficulty comes in this nonce thing on each block. You can scale the difficulty it takes by all these different requirements you can put on computing this number. And so it takes a little while, and that's why you have these huge like miners all over the world computing this stuff. But that's the basics of the blockchain. You have a block, list of transactions connected between all the blocks that have been mined, and it's really hard to change a previous one to make it valid. So that protects it security-wise. And so it just happens that everyone else stores this copy of it. And so that's why, for example, like the data team said, it's really complicated to store a lot of data in it because everyone that operates in the blockchain has to store the data to actually participate. So it's expensive and a lot of network congestion to move that much data around. Yeah.
So what do you think will be what spurs the transactions? Will it be side chains? Will it be before?
So yeah, so I'll get into that. We have a patented system that does what you're talking about. Yeah. So we did that. Let's move forward. So the blockchain is a lot more than Bitcoin. Most people you talk to when they first hear about this thing is like, oh wow, like I say blockchain, then they think Bitcoin or they think cryptocurrencies, and there's like money, you can spend money around. That's it, right? No, there's a whole bunch of other computing paradigms that use the same technology of everyone having a small piece of what you're doing stored where they are. That provides a lot more different use cases. So the one that Dada mentioned was called a token. And so there's a certain token you can use on what's called Ethereum, which is another network, that you can actually make it do basically anything. You can have, it's called a smart contract. And so you can code different functions into it. You can attach it to different physical assets. You could attach it to like a piece of art, for example, and then you can trade that token between people, and you can put it on an exchange, and you can have different things involved that are very particular to your use case. So it becomes very adaptable to whatever you need. And so it's more than just, you can put this on anything that allows for easy transfer. And what I think is most important is algorithmically transferred or algorithmic like document changes. And so things that used to take days, like settlement of different stock transactions, for example, it's instantaneous because it's coded into the actual token itself. And so in the case of art, for example, you could attach like the certificate of authenticity, like whoever manages the art piece at this time, to a token. And then as long as the token holders believe that to be the valid information. Now the difficult part is what you store in the actual token. And there's a lot of other alternatives for actually storing it. There's this file store, a Terry file store. They kind of got a little complicated, but they're a little bigger themselves, probably a little bit. But it basically is this data store that you just store anything on. And it's the same idea that if you structure it right, creates an immutable record. Basically, the file name that you use is based on what is in the contents of the file. So if you change it, it's no longer the same. So you can track to make sure that no one like all of a sudden changes the certificate of authenticity. All of a sudden, everything will just stop working and you'll know that something's wrong, which is really important for something like this. And so it then just starts to look like a share of a company. You can think of it like that. Any token can do anything that you want, trading, anything like that. But what most people use it as is like a way to actually distribute ownership and assets in a very cheap and easy way that's very easy to track. So it could be art, it could be houses, it could be like membership to a club, it could be whatever. And the thing that really is powerful about it, as long as you have enough people using it, is you can have price, so you don't actually have to determine the price ahead of time. Which helps for like price discovery for art. It can help like regulate demand if you're like a membership. There's a lot of different things you can do in that. But the really cool thing is if you have questions, you want all the token holders to participate in. So something like, hey, should we display it in this gallery? Or can I just buy it? Should we restore this piece? Like, should we charge a fee to everyone else that has a token? And then all the token holders can choose to vote on whether or not they think that's a good idea or a bad idea. And if the majority ownership is actually in the public domain, they can actually determine what happens to something like that very easily, one-to-one to your token ownership. And so it allows for a lot of distributed governance in ways that's really fascinating for a lot of different things, like where to display art or different things like that. And so there's a lot of different hurdles that are still being addressed, like the speed, the scalability, stuff like that. But the paradigm itself is very fascinating. From a lot of different reasons, as you can see. It just makes a lot of things that used to be pretty complicated, like having to call everyone that owns it, especially if you have over like 20 people owning it, to communicate with everybody, and like it just becomes like a huge hassle where this just happens automatically. And so that's like half the gist of it. There's a lot more to talk about. This is my best summarization attempt of what's going on here. Yeah, so let's see.
How do you link the token to the physical work of art?
Sure. So
is it embedded, or is it just going to be something you're going to assume the two go together, like paperwork and
well, so the way that we'd help with a lot of this stuff is you can establish like an independent trustee that is given ownership in the piece, either like mostly by like legal documents, whatever jurisdiction the artwork is in. So let's say in the United States, there's like some certificate of ownership that you own that asset, right? We attach that piece of ownership stating that the independent trustee, whoever that is, owns the asset to the blockchain in the form of IPFS, so it's distributed data store that has immutable records that's stored just like the blockchain is. Yeah, I mean, you could kind of say that there's a lot of pieces that still to be worked out exactly, but you can build a pretty advanced governance system around it. It's more like entrusting someone that does this already, so like an art management or like a gallery or something like that, with the owner, like the management rights to something like this. And as long as the token holders agree that that's like a person that is capable of undertaking that position, because it's still a physical asset in the real world. You need someone to care for it, move it around, like display it, generate revenue from it. There's a lot of different dimensions that you can figure out how to do like from the complicated side of that. What our company does for the most part is engage with partners that are more interested in solving that particular problem, because it depends a lot on experience and what their connections are. And then we help work with those companies to actually put the technology in their hands to do what they want. So I'm not intimately familiar with the exact art world implications of it, but our partners that work with us are. And so fortunately, I can't add much more than that from that side of it, but from the technology side, yeah.
So the token itself is just a file behind the database?
So it's the same thing. So you can deploy this piece of file to the entire network that has a list of what you can do with it, basically. And then anyone that tries to do something with that token checks to see what that file says. And if you can do that, you can do that. I can't like send something to someone that I don't have a balance in, or like, because you'll think we go negative. It's just like code that transfers around the world. Think of it like that, like a small file that when you try to actually do something with, it checks to see if it's valid. You could make Bitcoin, for example, using a token. You could just say, just allow two things, like trade, or actually just one thing, just send it from me to you. That's it. You could do that and build it using a tokenization type platform. When people first built Bitcoin though, they just thought, what's the first thing that makes the most sense to people? Let's just make a coin that I can send money from me to you. Fair enough, right? That made a lot of sense to a lot of people. And then once that community got bigger, as it is now, people started doing all sorts of other things with that same technology. And that's kind of tracked the growth of this industry itself. And that was a really good way to get people interested, but it had a lot of issues, as we're seeing now. Yeah.
So,
Yeah.
So just so we used to talk about like social tokens kind of talking to each other. Is that like a framework, social framework that's like surrounds that, or that you build out yourself? Or
Let's say it one more time. Sorry.
you're talking about like token holders being able to discuss
Yeah.
amongst themselves as like owners of the token.
Yeah.
Is that you have to like build a separate social framework?
Yeah, so it really depends on what you actually build into it. There's not like a whole like, hey, this is how you do that. That's how you do that. It's changing constantly. Just like how if you were to build your own, just like say like, oh, I'm gonna click this checkbox, I'm gonna be able to talk to anyone else. So you have to build it just like anything else. What we've seen a lot of is people that have this expertise, like in a vertical, so like art, real estate, or like that. They don't really understand the technology behind it. They understand the business really well, and they're like, hey, can we put this on here? If so, like, all right, let's help you like figure out what you want to do. We'll make it and then allow you to just work on your business. Then at the same time, you can have this new technology to power the backbone of it. Is what we're most commonly doing for the most part. So yeah, and I'll show you a demo of what we actually have built so you can see what's going on here. It's easier to see once you kind of can visualize it. Yeah. Yeah. And basically, so you have to think more, to take a step back, I guess, and more abstractly. If you just have a token, it says like what token it was, and then who was it sent to. Basically, even more backwards, like this is the program we ran, this was the function that we ran, and these were the arguments. So like the people involved or anything like that. I'm trying to make this as little as computer sciencey as possible, but like think of it like when you click a button on Instagram, for example, you're running some function that says like a picture. You're the person, and so your username is in there. That's all it would store. Yeah.
So now we're going to move on to the second block, right?
Yeah.
In the second block, so none of what's in the first block is going to transaction be the second block, right?
It's uniquely represented by this, what I call earlier, like a hash. So like just a representation, tamper with it. But these are all new transactions, so new things that were run. Yeah.
Is that hash kind of reflects all the transactions?
Everything previous. Yeah.
So that's a running tally, not just the single.
It's an abstraction of everything that happened previously. It doesn't, from this number, you can't like, or this hash, you can't like get any information from the other blocks. All it does is it says, if I change any block before this one, this number is not going to match up anymore, and you know that something's wrong. That's all it does. And so that's generated each block that it's added so that there is this sense of security such that you can't tamper with anything that happened previously, which is why people call it like an immutable ledger, meaning that you can't mutate anything after it's been written, because you would have to rewrite everything after it. So it's supposed to be as permanent, even though DNA kind of, yeah, you can think of it like, getting too cut. This is the issue. It gets kind of complicated, so I'm trying to do my best to explain. People have definitely tried, and there's a lot of protections that are now built into it, like limiting how many blocks you can make a minute. There's like a couple different exploits people have tried, but no one's actually been able to like hijack this ever. So it's just a probability. You can never be certain. And so someone could do it if they somehow had enough compute power or found some bug. And I don't know, but there's a lot of different things that could go wrong. You can never be sure of it. But right now, so far, nothing has happened to it. So.
With the Luddite rainfall. So basically, I have a physical work of art.
Yeah.
A painting by Bernay. And there's a separate token that goes along with it.
Mm-hmm.
A custodial bank type of ring.
Sure. Yeah.
So when I sell the painting, this person here,
Mm-hmm.
they get to the custodial bank will make a change on their records, reflecting the tokens ownership by her as well, correct?
No. So once you actually issue the tokens, you can basically say like, hey, I want to sell 30% of whatever like asset you have. Let's say it's a piece of art. We basically will help you generate a legal document that says like now 30% of the trustee owns this. And then we issue some number of tokens that each represent a fractional share of that 30% that has been issued. And each time that actually changes ownership, nothing has changed in the physical world. Just the ownership change on the blockchain is tracked. So different people hold the tokens. So you can say like, yes, there are, let's say for just discussion stakes, in that 30%, there are 30 tokens. And so I could own all 30 tokens and I'd own 30%, or I could own like 2 or 3 tokens, and I can transact between people. Yeah.
If for some reason,
Mm-hmm.
it basically becomes to go along with it, where it can be sold again at a later.
Well, the piece that's stolen no longer, I mean, like it no longer is in the possession of the, like whoever was domicile or like taking care of it, right? So the tokens just lose value, but they're tracked to the authentication work that the same person that holds the majority stake also has.
I guess what I'm saying though is like if it's stolen, and someone tries to sell this without the token and all that backing it up, then I know it's automatically stolen.
Yeah, you can track ownership. That's another application of this. And you could see like if something shows up in another area, like this piece of art that already has ownership here, and now people are trying to sell it, you can pretty easily see like, whoa, that's not supposed to be there. Like that should be in this area. Like that's stolen art. So there's actually a couple other companies out of Stanford working on a similar project where they swipe the, forgive me, I'm not a chemistry person, but something that determines the unique signature of that work of art from like a biological sense. And then attach that to the blockchain, and so you can see what are supposed to be at any given time. Yeah, that's a cool project. And so like there's a lot in the space that's so new. There's a lot of room for like cooperation and partnerships and stuff like that. So that could easily be something that you add to this. The cool thing about these tokens is you can issue a change and then it's reflected everywhere else. And so I could say like, oh, like 2 years from now, like this thing becomes really common. We can add a little thing that says this is its signature or identifier. And if you try to buy it and it doesn't have that, like it's not the painting. And you can see it's almost like provisional patents where you can see where it first listed and was first existent. That proves it's like the correctness and authenticity. So
There's also now insurance on tokens and on smart contracts. So if the art is stolen or destroyed, if you have all these tokens that are proof of ownership of that art, you can collect insurance.
That's an almost worse like title.
It's very much so. Like you asked before, how does this token
Yeah.
attach to the painting? How does your building attach to a person?
Yeah.
Piece of paper, there's
you can think of like anything else that exists in this world, like insurance on our houses. It's just like slowly being added to the infrastructure that's developing. Yeah. So we can talk more about questions later, but I think it makes more sense now to show you exactly what we're doing. So the big issue right now is like moving things very quickly back and forth. So we've built what we call a computation channel that allows you to actually do all complicated computation off the chain and then publicly verify it and then log it back to the chain once it's done, which allows you to actually have instant computation as well as the verifiability of the blockchain. Have immediately cycle back whenever you want to withdraw your currency. And so it feels and looks just like a normal computer or a normal website, but it's running on the blockchain. So I'll give you a demo of that. Yeah. My computer takes forever when I exit Google Slides for some reason. All right, here we go. Alrighty. So our big interest in this space right now is it's really complicated. I'm not going to stand in front of it. That wouldn't work. Really complicated for the everyday person to understand what's going on with this kind of stuff. I spent, like 35 minutes trying to explain the basics to you, and I would feel that it's probably still pretty fuzzy in your head. And so for people that don't have that, even that, like they're going to look at it and be like, I don't get it. I don't want to do it right now. It doesn't feel safe to me. It doesn't make sense. So our benefit, or what we're trying to do, is we built a platform that you download or you go to just like a website, and we take care of all the fancy, complicated software you need to actually access it. And for the technical people, we're open sourcing it. So it's basically Web3.js, and then we built our own wallet, so people don't actually have to play around with it. It's just like MetaMask, except it works in like a desktop app. And so you can see here, this is obviously a demo. These things are not on here right now. But let's say we go to art. Like, oh, wow, like you wanted to look at something like this. So we have all this data here on the right, the details and the floating price. And so all this is stored on this distributed data store I talked about, so that if it was mutated, all we store in our database, or the thing, it's basically what's called I don't want to get into details here, but it looks across the file storage system and will then pull that out for you to see. And so there's a couple of things you want to note here. We're working with JP Morgan Chase, and then the biggest bank in Korea, to actually fiat currency. You just transfer money in just like you would to any other company, like in, let's say, Venmo or something like that. You hook up your debit card, and then you get you just worry about what your DUSD is, or at that point, so you're actually not exposed at all to any sort of like Ethereum or different things like that. And so it makes a lot of sense for people then at that point, because then they don't have to worry about like, oh, it doesn't really matter. And as long as your exchange operates in that sort of fiat currency, you can use that. And so what'll happen is you have your exchange account, which is the money that we have on our records that you can use to actually transact. And then the things that you have privately this is where it gets complicated, and we're still working on a lot of the UX to make this easy to understand. Just know that you have a digital coin, a token as well, that represents 1-to-1 stake with $1 in Chase's bank. So when you sign up, you deposit the money, and then you have this digital dollar, right? So now you can see this is $37 a share. You can see the market cap and the total number of shares, and then it looks just like you would if you ever traded stocks before. You can say like, oh, these are the recent trades. This is like the order book. This is like the sell order book. And so now I don't own any of this piece right here. And so they mentioned earlier that it takes like between like on Ethereum about 30 seconds to 45 seconds to actually do anything, which can be pretty frustrating if you have someone that doesn't understand what's going on. They're like, why is it frozen? Like, I'll refresh it. Like all the things you'd expect. It's funny. It's really cool to watch people just try it for the first time, like a normal Ethereum thing, because they just don't understand, like, and it's just not usable for the mass market. And so our solution is to do something where, let's say I wanted to buy this piece. I'll click buy, and so it'll say like, oh, this is a token name, token symbol, the amount I'm buying, and it's demo, so that's pretty fun. You can see the recent trades like that. And then if I wanted to just buy it, let's see if I want to do this correctly. Oh, I'm buying all of it. Hold on. Let's say I'm buying 3 shares. Let's try that. It will cost me $112 plus the transaction fee that, we might do it free like Robinhood does for the exchange, but this is not a gas fee. You're never exposed to gas fees because we run everything off chain. And then log it. So if I click submit buy order here, I just confirm that I signed it, and now you got it completed. Alongside IPFS with signatures. And so always logging signatures every 10 seconds. And so I can talk about the security side of this if you want later. It gets pretty complicated. But so you see, now you have it. So that's it. That's all now to IFS, as well as a couple other security precautions that I'll talk to you about afterwards if you're interested in that. I don't know if it's pertinent to the whole group. But now let's say we have this, and so we're still now off chain here, and so you can see like this is my token share balance. But now I want to lock it up in my wallet on chain. This is the only time you're really exposed to the actual blockchain, and you can see how much slower it is to withdraw. So let's say I want to withdraw my, just say one token and lock it up on chain. I'll request the withdrawal. We automatically on the fly convert to the gas fee to DUS dollars, and we pay it for you, so you're never exposed to Ethereum prices. So you request it, you'll confirm that that's what you want to do, and now we present to you what we believe your and so this is the file that says this is all the stuff you've done since you actually had your last withdrawal request. This means nothing to you now. It's a lot of just garbage up here. And so we have a new interface that's coming out soon that explains everything, as well as have a third-party open source validation checker that says like, wow, this is correct, looks at your IPFS records, and you can also reconcile what you're doing to see if it's right. And then you could say, yep, that's good for me, and now I'll confirm. And so now this is the part where you wait. And you can track it on Etherscan and say this is, now it's, you're waiting for consensus for it to say that this is actually logged to your wallet on your public address. And so there's a lot of benefits of actually having the computation for the most part off the chain. One being which in a marketplace, you sometimes want to anonymize the order flow before it actually hits the exchange, which is a huge issue with decentralized exchanges. Actually take advantage of there's all sorts of different latency hacks. You can make a lot of money basically just using decentralized exchanges. And so we have a theory that they're not going to be very popular for the mass market, or it's just going to be, I mean, yeah, I won't get into that. The trader in me is like, wow, I would never use this if I was ever in the public because you're going to just get eaten alive. And so there's a lot of reasons. So you can see this took 34 seconds now to reconcile. And that's the only time you're ever going to really be exposed to it. So you can see it's completed here. And now I have one share in my wallet. But you don't have to download any extra software. It's all built into our program. And so, so our team, we have a team of 20 people. Tech team is 13 of that. They're all in Korea, South Korea. They've been working together on this now for like 3 years. So it patented internationally. And so we're trying to now that we have all the tech built, instead of doing this whole like, hey, we have this idea, and then we'll go build we're like, let's just try to build it first, get it working, and then we can start working with partners with the product that already works. So it makes a lot more sense to people that can try it and do it. And so that's where we are now. So we're in New York, Hong Kong, like talking to people, partners, real estate, art, anything you really think about. People that have a lot of cool ideas for tokens that don't have like the technical know-how, that are just like, hey, like I run this business, like I have this huge real estate portfolio. Can I throw a bunch of these assets up here? There's a lot of like regulatory stuff we deal with for people, everything like that. And then they just keep running their business as it is. And then we help them have additional liquidity or anything like that. So yeah, I think that's probably about it. Big questions now.
He already passed the CUI test with this project.
So yeah, so we
Yes, I need the context of
we have in-house counsel that handles a lot of that, and then we have it. We're working with, if I'm wrong, but I think it's Goodwin in San Francisco. I think Goodwin, right? Then we have some contacts in some other law firms, but we're also in. The thing is, like, you have to really engage the regulators, and so we probably won't try this first in the United States, or if we do, we'll actually like have the assets like signed over to a company in an area that understands the actual ICO space or like token space. So we have contacts. So I had a call yesterday with the head regulator in Singapore talking about doing this kind of stuff, and he has the connections to all the people that want to be interested in it, or the Isle of Man is another really popular one. And so we open up those connections, we make sure that it works right, and then if you're in the United States, it just looks like a security, and so we're in the process of getting a broker-dealer and an ATS, so you would be able to do it. But it doesn't really make sense to securitize in the United States because it's super expensive, and you have to get the SEC regulations, but if it's a foreign security, you can trade it the same way and then actually trade it on here. That's why people like to work with our platform, because we'll handle that for you. You just build a token. You can pay some of the legal fees of setting up the token, but the exchange itself, I mean, we run it. There's only one ATS in existence right now, by the way, that actually is compatible with this kind of stuff, and it launched like a week ago. So there's.
Do you have KYC?
Yes, that's built into the platform. I'm obviously not going to show that to you. Yeah, there's all sorts of stuff that you have to do to make it for production stuff. Well, I mean, what you want to do is, I mean, that's where the biggest niche is right now. Like, obviously, we hope to avoid securities laws if we could, but there's this huge market of people that it just falls under securities laws, and so we help to service and try to work with that market, which makes a lot of sense to people, I guess. Yeah, sure. So that is up to the discretion usually of our partners, and so it's something where like they might say like there's this management company for. We like to have a rotating gallery. It's whatever they can get from the market. So like we have this process called, at least in art, called an APO, I guess, like an art offering. And so then if it fills up, then clearly the demand's there for whatever you're proposing. But if it's not, I mean, we can change the token and try it again with something that works more with people. So it's very case by case, put it that way. Depends on who's listing the actual token itself. So you can think of us as like the layer behind the scenes. We'll white label everything for you. You just worry about getting art or your company or something like that, and then we can help with everything else. So, yeah.
Pretty cool because it's like the next generation, pretty much tokenization. Like security tokens.
Sure.
Do you know any other players in the space? I know Polymath.
Yeah, Polymath. So we had a call with them a few weeks ago. The thing is like the space right now is so early on and it's so white space that like we're actually like starting a regulatory alliance with Polymath, with Gibraltar. I think the stock exchange is also working on a product similar to like an exchange type thing. It's just too early to really be competing right now. Like we're just going to get wiped out by regulators anyways if we do that. And there's just we just think a huge market in this space, and so we're really interested in working with people in that sense first.
Especially because in the field of exchange, you're really like the distribution asset representation trading liquidity.
Yeah, I mean, that's the huge piece of it for real estate, for the trading side of it. It's like you don't have to hold the thing forever now. You can trade it. I mean, it's not going to be daily right away, but like a week. We're building we also have a liquidity services team that deals more with institutional investors that helps with block trading in this space, but totally different discussion. The goal is to like make it make sense to people, and in its current form, we don't think it makes sense to a lot of people. So we're just trying to hide as much of that complication from you as possible without jeopardizing your security by participating. So you can think of it as part of that. We think that there's just so much benefit. A lot of it I don't think anyone's figured out yet in this whole space, the blockchain space and everything, that can actually allow you to do physical assets, digital assets, memberships, everything like that. We're helping contribute to the technology side to really push it forward, and then from the business side, we just see this huge opportunity in this space right now to do what you're talking about. But we open source a lot of our technology. Just the exchange computation part, we have to run these complications, but making sure it's done right. That we don't open source all pieces of that, but everything else we definitely contribute. It's like the wallet, for example. Stuff like that. Yeah.
So where would we find the art that's available by shares of
Sure. So it would be just on this website. So we haven't launched yet. Yeah. So we're still finalizing everything. We've been working on this for 2 years. We bootstrapped the entire time. Haven't taken any investment. Still get rich quick. So we're just making sure that it's ready to go when it's ready to go. Yeah. And so yeah, so you can go on the website right now. It's we actually recently changed our name. It's Yosemite now, just yosemitex.com. And you can try this out right here if you want to. Yeah.
Once it is launched, is it going to be the kind of thing that's easy for a casual user?
That's the goal. If we're not doing that, we're doing something wrong. So yeah.
Okay. And then if I, as an advisor, have clients who wanted to have their art off,
Yeah.
how does that process work?
So we work with you, come meet your, the whole point is like in this space, there's not a whole lot of legitimacy going on right now. I mean, when you meet anybody, you have to be so like wary of like, are they who they say they are? Like, it's all this crazy stuff. And so, the only way, I mean, 'cause it's just so early, it's like the Wild West. You basically have to go visit them, explain to them, this is what we do. This is who we are. We're not dealers, anything like that. We're just business, and like it just makes the most sense using tokens. We'll come explain it if that's what it takes, and then we walk you through the process and everything. So it's very high touch right now, and hopefully in the future there'll be some like sort of portal maybe, but it gets complicated because you have to like authenticate things and stuff like that. So right now it's high touch. We add it manually on the back side of stuff, so you can't actually do it from the website, and then it just shows up on a list or something like that. So, and the cool thing is because it's a token, anyone can trade it, as long as they have the compliance side of it. So we can help you issue it. And then as soon as it's like floating around the space, like anyone that has the compliant technology can trade it if they want to. We can also restrict that by adding different features to the token itself to prevent it from floating anywhere else. Depends what the lister wants. Yeah.
So then, let's say a collector has offered their damage.
Yeah. Yeah.
And then they bring it to the dealer and they see it. So how would be known to people in the real world who are not familiar with blockchain technology that the owner is not the full owner of the work anymore?
Well, so we have this is the same thing where we're drafting like legal agreements with different like people, like saying like, hey, this is just, and treating it more like a company that owns the piece. Like, so let's say a company owns the whole thing, and then we give up 50% ownership to the person that's listing it. That's the arrangement they want. And then 50% of it to an independent trustee. And then we tokenize the trustee's ownership for this. So it would just look like a normal thing. And then you just like any other holding company would own a piece of art, and they can do whatever they want. Yeah.
So if they went to sell it, it would be obvious there'd be no escape.
No, like, and then, well, then what would happen is like, so this is the thing too, is like, let's say that a majority of the ownership stake was out in the public domain. Let's say you could pose a vote and say like, hey, should we sell this for this price? And if the majority owners say no for whatever reason, then it won't sell, even if you own 30% of the real world on like a piece of paper, because you don't own the majority of it anymore.
Would this kind of, so my perspective as an appraiser, with this information, that's I mean, with that kind of restriction on its potential salability, be something that would be known generally.
I mean, just like a company. Like if I'm trying to buy a company, someone comes to you and says, I own 30% of this company, you want to buy it, then 70% of people say no, and you can't legally buy it.
Right. But the value is potentially compromised
if the people that hold it are like very adverse to like selling it.
If there are potential restrictions on sale.
Which is determined by the lister. So if they, like if there's something where like they put in a price initially that says if there's ever an offer price, we're selling it immediately. You can determine it all right away. You can determine it later as long as it's voted upon by the majority holders. I mean, the thing is like, this is literally a piece of code that you put on this thing, allows you to do this. If there's any specific things that are built into it, you can build it in. It's just a matter of like figuring out exactly what you want. So that you can make it as complicated or as simple as you want. Hopefully you make it as simple as you want. There's a lot of issues right now with like things getting hacked because people try to be too fancy. So it's important to have like security auditing, all sorts of things like that. But you can do anything you want. It just takes more time to make sure it's right. Even then, the more complicated you get, the probability that it could be wrong starts to climb a little bit. So you just got to be careful. But yeah, sure, go ahead.
Just to see if I understood.
Yeah.
The fingerprint of the art, it's on IPFS.
Yep.
But then you issue, you deploy a contract under that.
Like itself has like a link to the IPFS hash, basically.
So it's a contract for every piece of art.
Yeah. That's what for the most part we do.
Manage the shares of each contract.
Yeah, exactly. Yeah. It's traditional that way. It might make more sense to do a single contract for all art, but it gets complicated. And so we've opted. Yeah. And because most of the trading itself happens off chain, you don't have to like pay to place an order. You don't have to like pay to like, it makes it a lot easier and more scalable, I guess, in that sense. It's not perfect. None of these solutions are perfect, but we think it's the best for what we are doing. Yeah.
There are other companies that like you tokenizing
Yeah.
That already exists. I know what it is that you do.
Sure.
So when I tokenize something, am I using your token? Am I creating my own token?
Mhm.
What is the process?
So I mean, people that tokenize other stuff, I mean, we're fine to work with them. We can trade their stuff. It's one year ERC 223 compliant, it works. So we don't necessarily view them as a competitor. Those people tokenizing stuff, and then repeat your second question again. Sorry.
When I bring an asset to you and I want to tokenize it,
Hmm.
am I creating my own token process?
So you can create your own if you want to, or we can help you create it. It's like I said, it's a high touch thing right now because it depends on your familiarity. You might be more interested in just helping to create the token, and we can help provide like the volume and liquidity that makes it useful. One way we do that, for example, is we're working basically creating like almost like pseudo ETFs. If you ever use like Motif, for example, and say like, let's say you want to buy a bunch of art in a certain art era. It's pretty easy to combine those into like a single like representative ownership stake, and then you just get all those at once and then transfer them off in one transaction. So it's just like one piece of gas basically, instead of having like hundreds possibly transactions you'd have to do, so it'd be cost prohibitive. You can actually create volume in all sorts of different assets at the same time as most people are buying, because like for the most part you don't want to like vet like 250 pieces of art. Some people might, but for the most part you might want to like trust an appraiser, for example, to put together a portfolio of like 50 pieces of art that they think are like high growth in the next 5 years or something like that, and then just buy that. And if you can move that, make that process easy to actually put it into the domain, makes a lot of sense. So you could create like another token that holds other. It gets so complicated to do this type of thing, but you can do it in a way that actually adds liquidity. And so we believe that our difference is we're trying to build the backbone behind all this kind of stuff, so that we can help to provide liquidity for all these. I think there's thousands of tokens now that exist, and so there's a lot of good projects, good things like that just don't have people that know about them. And so helping to provide that so people can work on the product and everything like that, and we can handle some of the technology side of it, it's a relief to a lot of people we've talked to. It's more complicated than you would expect, is our feedback that we've gotten so far. So, let's see, anyone else?
Curious, the indexes which are shown here, are they based on the digital assets traded, or you also mix them with the real market?
Can you say one more time?
I mean, the indexes, yeah?
Oh, here?
The price.
Yeah.
Only the volume or the volume of all the digital shares traded.
Yeah. I mean, we want to make it look as much like a market as you would expect. Like,
but do you also have the auction results? I mean, what's happening with the price, what the appraisal price?
Yeah, sure.
Price
Yeah, so this is what we have. I mean, the initial price was, it floats after the auction. You can look at what the auction price was settled at, but after that, we only really show the floating price. So, you can see just the history and see if it's gone over, if that answers your question. But it lists the volume of like shares traded, the amount of money moved back and forth, like the market cap. I don't know if that's enough. Yeah.
Who sets the price at which it's going to be tokenized?
The lister. Let's say I set this like a piece of art I drew in my backyard for like $5 million.
Yeah.
If you don't hit your price, like you can have either reset and it gets refunded, or you can have it where you just take whatever amount you got and then you keep the rest of the shares. So there's two options. And so for some people that's good. For some people they prefer just to have it all roll back and start over again at a different price. So it just depends. Yeah.
Do you have some kind of protection from pump and dump?
It's not initially. It's mostly just supposed to float right now. So if there are physical assets that have some intrinsic value, like a piece of art, you would think that'd be a good value at some point, I guess. But no, there's nothing built into it to prevent pump and dump. Yeah, sure. We'll say it one more time. But, Messina, CR platform. Yeah, so it's like the thing where so like doing something art similar to this, but we think our benefit has to do with the exchange. The technology is superior, but for the most part, that's for users, that's not enough. For the people that Messinas is gathering, we think basically transacting in fiat is going to be a lot more interesting to people than having to buy Ethereum and go through that whole process. At least for them in that case. But we're interested in a lot of different assets too, and like they're just one piece. And if they can bring a bunch of like tokenized art onto the platform, we can trade it. So that's good for us too. So it's kind of like a weird partner competitor relationship type thing. So I don't know. I mean, we're also, one of our internal research projects is building a tool that allows you to actually get just by like pulling in orders or like pushing your orders out if you so choose. Like let's say that you want to buy like 20% of a piece, and we only have like 2% of it on our exchange, to allow you to actually, it's inspired more by like IEX trading and some of the stuff that they're doing, but allow you to actually execute orders on different exchanges, and we can handle the risk and counterparty risk for you if you want. But that's not ready to go yet. But that's something that we're thinking about. But
in terms of security, since you're
Yeah.
kind of going on top of Ether, creating a new layer,
Yeah.
Is your layer more safe than Ether? I know. You know,
Sure.
like, you know,
So I mean, so like so like this is where I spend most of my time thinking is like, all right, is it better than centralized, right? So let's say you hacked our database, for example, or anything like that, because you'd be like, wow, database hack, like that's going to be all we do anything. For every order that you actually execute as a user, it requires a signature. Otherwise, we won't accept it as a valid order. And so we actually don't keep any of your private information on our servers. It's all stored in your wallet locally. And you can back that up if you want to, and we're working on other interesting ways to like prevent that locally, but we don't store any of your stuff ever. The other option is that like you were to hack the exchange server, and then the hope that like, wow, like I could just withdraw as much money as I wanted to from the vault contract because I have the key to sign the exchange transactions. Well, initially you would create an order. So you could not create a valid order that would allow you to do that because it would require the signature of something. And so you would just basically have to take a record off the exchange. But we're working, basically, if you have another cluster that helps to verify the withdrawals, so our exchange server signs, and then it also signs using like think of like an EOS, DPoS cluster. I'm assuming you know what that is. EOS is another consensus platform, and you can ask them to do additional work. And you would have to have a majority of that platform hacked too to actually withdraw money that you couldn't, because they also verify. So it's important to have a third-party verification tool as well as our own verification tool. And so that third-party verification tool would mean that even if you hacked our server, signed a valid transaction that said you could take $1 million out, that would block it unless that whole system was compromised too. Which is, I mean, like even just the most advanced security systems nowadays just have a centralized server doing that. And so we hope that that's enough. I mean, that's strictly more parties involved than anyways. And so we hope that, I mean, you can't really do, in our mind, a lot safer than that. It's like compromising the Ethereum network at the same time. There's just some things you kind of take that you can't do to build a system like this. So
what about like taking your signature and having a signature?
if you fake it, I mean, if you dupe a signature, it's going to fail the withdrawal verification test.
What about faking?
It would, I mean, you can't generate it. If you have the public address and you have your hashes over the order, you sign with something that's not the true signature, it won't pass the withdrawal test. Because if you try to like get the hash back out, you shouldn't be able to. Otherwise, it's a real signature. So that wouldn't work either. I'm also, if you think there's like a way to hack it, I'd love to hear, because obviously that's important. Yeah, obviously important for us too to protect the security of the system. So, yeah. Yeah, so we're definitely in like the public comment phase right now. So like if you like it, don't like it, doesn't matter. If you think it's just stupid, I'll also like to hear that. So thank you. Yeah.